Welcome to a special episode of the Founders Speak podcast in collaboration with Culturenomics with Arjun. I guess a couple of reasons why this is a special episode. One, it's the first one where I actually have two guests on the yellow table, right? All other episodes so far have been one. Second reason, it is the last episode in 3 days, and I've actually practically lost count to the number of people I've spoken to over the last 3 days. But it's been a fascinating experience, and I think this is great that I have both of you who I do know previously. So I think it'll make for a good conversation. And thirdly, as I said before we all met, I said I've got the Tans in the room. I've got Neil Tan. He's the chairman. I do call him Chairman Tan too. He's the chairman of the Hong Kong FinTech Association. Welcome, Neil.
Thank you. Thanks a lot.
And I have Kelvin, who I've met, I think more recently, a couple of months ago. We met in Dubai, where he very kindly came and spoke to the community that we've built in the UAE, which is called FinTech Tuesdays. He's the CEO of audax, which, if I'm not wrong, is a startup which spun out of Standard Chartered.
That's right. Glad to be here, Arjun.
Thank you. Welcome. So, gentlemen, 3 days are over. It's a mega event in all intents and purposes. I think it's the only event that I know globally, and you'll correct me, where actually they're able to bring the regulators, the banks, the incumbents, insurance companies, the fintech players, the investors, ecosystem enablers, commentators together. I think the ingredients are perfect for a perfect dish. I think it's been 3 great days. We had Ajay Banga this morning, which was a fascinating conversation. We obviously have Ravi Menon, who's the MD of Monetary Authorities Singapore, who's retiring at the end of the year. I think that was quite a touching moment, if you didn't see it, when there was a talk in the morning between Swapnendu and him. But having said all of that, the overarching theme is one which I think will go a lot further than the event, and which is re-architecting the world's financial system. And you can pretty much put everything into that topic, right? So I guess the first question, Neil, I'll start with you.
Sure.
What do those words mean to you? As in, what sort of echoes in your mind when you hear the word re-architecting the world's financial systems?
Yeah, absolutely. I think that, when you talk about architecture, it's about structuring and how do you build things from, whether it's coming from scratch or from a strong foundation. But if we talk about fintech, it's always talking about how you get faster, how do you get cheaper, how do you make it easier, how do you make it more secure. Those are kind of like the key attributes inside of that. But then if we talk about it from a global economic perspective, we're talking about accessibility, we're talking about affordability, we're talking about inclusion. We were talking about that earlier. So I think these are kind of like the key attributes that I kind of attribute to the next generation, if you will. Right?
That's interesting. So fintech has been a very key theme, and I'm going to come back to you in terms of the way I see the world of fintech having evolved. But before I do that, Kelvin, what do those words mean to you?
Well, very simply put, I think banks are the central nervous systems of the entire global financial system. And from my perspective, I think the foundations that the banks need to lay to be able to run things at scale, be faster, be cheaper, be more efficient, be able to use AI. In fact, one of the key quotes this particular week that I've heard, and I really liked it, is in order for there to be AI, you need I first.
Yeah.
Right. And what we really need is the ability to run real-time data, the ability to scale to millions of nodes, the ability to run tens of millions of current users, all of which, by the way, do not exist in banks today. So for me, those terms, it's basically what I do, is we create the platform and the ability for banks to upscale themselves to the point whereby scale, data, and real-time integration is no longer an issue.
Right, and I'm going to come back to that, but here's just to have some fun. Every time you use the word AI, you guys pay me $50, right? Because yeah, right. No, I'm going to let him go with the first one, but for now, the rules there.
But do you have a lending platform too?
Please keep tab on how much money I'm going to make. Tonight is going to be a fun night. All right.
Do we add blockchain to this conversation?
Well, no, don't do that. Right. I'll be making too much money then, right? So Neil, role of fintech, right? So this will also show my age. So I got into the world of fintech pretty much at the start of my career, right? And I can go back 20 years when I actually joined GE Capital.
Sure.
And we were injecting technology in the way cars were sold and refrigerators were bought, and so on and so forth. They call it embedded finance now, by the way, right? I wish I knew it. I could have made a lot of money on that word too, right? But then we went through this period in fintech, it was like fintech versus the incumbents, right? And there was this sort of rivalry, the versus, right? The big words were fintech, big V, big S, and then people realized that it doesn't work that way, and increasingly then the rhetoric changed to cooperation, which was we're competitors, but we'll learn how to cooperate. Now, I personally think going forward, it's actually now turning into cooperation, right? I don't really necessarily see as competition. I think what the fintechs have done, and even the ones who have failed, and we had a very interesting conversation around digital banks where less than 5% of them make money, right? They change consumer behavior and therefore sort of brought the incumbents along. What's your take on how has fintech evolved? And let's use Hong Kong as an example, right?
Sure.
So, or the wider region, right?
Yep.
So what's your take on this?
Yeah, I mean, I think ultimately it's kind of like, originally it was two different kingdoms, if you will, right? I mean, you had the fintechs and you had the traditional banks, finance, insurers, and so forth. And then these folks, let's say if we took insurance as an example in Hong Kong, you've got a number of different players that are starting to build up inside of that space. And what they're trying to do is build new products, new propositions, new channels of distribution, right? So you have a number of them, whether it's like 1 Degree, Avo, you've got Bowtie, so on and so forth. But they're all delivering different products that actually none of the incumbents actually have, right? They're doing like hiking insurance and they're doing like weather insurance. Like if you hit a Typhoon 8, you hit the jackpot, right? So it's like, so it's something that the incumbents don't do, but that's something that they could learn to do. And that's how suddenly they start going into sort of this sort of cooperation, right? And then ultimately, is it in a white label situation, or are they offering different type of products together, or co-branding and things like that? I do think that that's where that type of technology gets attributed to, and that's how they kind of build the whole ecosystem better for the future, right? So,
Kelvin, do you have a view on this?
Yeah, my personal view is that because capital was cheap for a decade, lots of fintechs came up, created new business models, challenged the banks, so to speak. But what really happened was the banks looked, learned, evolved, got better. And now where capital is expensive, the fintechs that don't make money are starting to die off. And the banks are effectively taking over the things that really make sense. So think about it, right? The best example I gave you, banking as a service, which is something I'm very passionate about, as you know, sprung up in the last decade everywhere, right? The Rails, Synapse, and so on. I mean, Railsr has kind of gone to administration. Synapse's example was the best because 2 weeks ago, they, Evolve Bank and Trust, their partner bank below them, effectively went directly to the front end customer and said, forget Synapse, use us because we've upgraded our system such that we don't need the middleman anymore. So that's a very good illustration of what's really happening in the bank fintech conversations, whereby unless you're a fintech that focuses on a very niche play that the banks find you complementary, everything else you would see the banks coming in and trying to take over.
Okay, so you mentioned banking as a service, right?
Yep.
And it's a term we consultants have embraced lovingly and willingly, like embedded finance, right? But taking a practitioner's perspective, right?
Yep.
Can you sort of, for Chairman Tan and myself, deconstruct what is banking as a service?
Well, in the very simplest, at least from my perspective, if you ask 20 guys, there'll be 20 different opinions of what it really means. Embedded finance, banking as a service. From my perspective, very simple. If you are able to offer your license and balance sheet to someone else so that they look and feel like a digital bank to their users, that's banking as a service. Now, the components that you offer could be lending, could be deposits, could be servicing, could be CRM, could be risk analytics. Doesn't matter. The fact is, these are banking activities that you offer to someone else where they can offer it on behalf of you to a third party or end consumer.
Okay, so let me put a question. So yeah. I've asked this question to a number of people, and while you're correct at saying that you get 20 different answers, I think I've been able to distill them into sort of two, right?
Yep.
So one is what you've just said, and yeah, the others are who say exactly what you say, but then they say that there is actually a technology layer which sits on top of it. So it's not just about licensing or passporting their license. It's which comes with all kinds of compliance and regulatory cover,
Yep.
not just balance sheet, but there is actually quite a critical technology layer which comes along with it, right? And then the others just say no, it's pretty much about just the balance sheet and the license. The rest is so. Which, I'm not saying which camp, but what is the definition then for you? Is it A or B?
So
Is technology part of it or not?
absolutely, I think technology is fundamental to it, because if you want to run banking as a service, you are effectively signing up for massive scale. Because if you're not getting massive scale from the business model of banking as a service, then you have failed. So that's one. Technology is absolutely critical. You need the ability to run multiple nodes. You need the ability to scale tens of millions of concurrent users. You need the ability to run real-time synchronization and data. I won't go too much into that detail, but absolutely right. The question I think you're really asking is whether or not there is a difference of opinions from a business model standpoint. Do the banks offer the technology, or is there going to be some layer between the banks and someone else? I think that's the real conversation. Most banking as a service players in the last decade have been the layer between the bank and someone else. And the banks are now catching up. I'm not saying that they're there yet. The banks are still some way behind, but a lot of them are starting the process of catching up, despite kicking the can down the road for the last 15 years on technological evolution. So what the banks need to do, and the Evolve example, which I spoke about in a couple of minutes ago, is the best example. Once they have caught up, they don't need the guys in between. And that's which is the fundamental flaw of that particular business model, in my opinion.
So coming,
maybe I can. Because I mean, my background is actually I was at HSBC, so I was like doing digital partnerships and innovation team. So our thing was we were focused inside of embedded finance, so payments, lending, wealth, insurance, and we were also doing banking as a service as a proposition. Now, kind of back up as far as the strategy is concerned. Back in the day when they were doing all the virtual banks, Hong Kong has 8 licenses, about 28 different applicants. Singapore has 5. I think it's like 21 applicants. So the strategy was, if we look at that set, there's a ready line of people looking for that. And that's where the banking as a service opportunity comes into play, is that you already know who wants that type of service. So why not lend your balance sheet and also your banking license to facilitate that? So some of them end up going for like a CMS license, which is a lot easier to get.
Yep.
But that doesn't have all that balance, that $1 billion balance sheet requirement and so on and so forth, right? But I think exactly that is that, there's a technical layer that you were talking about, and a lot of people view it as that. When you talk about like ThoughtWorks, when you talk about Mambu and those types of platforms, that's what they're offering, is that technology stack. But then ultimately, the person that is missed out on the license, that's exactly what they're missing. They're not missing the tech. They can go anywhere for the tech. They're just missing I got a car, but I don't have a license to drive it, right?
Yeah.
That's what.
I'll simplify it. Only banks can offer banking as a service.
Yeah.
The guys in between are offering orchestration as a service.
Agreed.
If you want to be specific about
Agreed.
it.
And since
Yeah,
that's a
there
very
you go.
interesting question, so let me then ask a question, and I'll come back to Hong Kong. So
Sure.
so I used to be in Hong Kong during the time when the 8 licenses were sort of given
Sure.
out, right? Hong Kong's, with all due respect, a small country, right? You had a fair number of banks, right? The question I actually wanted to ask the regulator, never got to, was, right, if you want to democratize access to banking, right, and you want better quality of service, faster, cheaper, more efficient, right, why aren't you encouraging the banks to go down more, the existing banks to go down more the as a service model, and use the ecosystem that exists, whether they're telcos, retailers, airlines, coffee shops, whatever else. Instead, let's launch 8 Ubers at the same day.
Sure.
Right. So explain to me that I never understood it then. I still don't
Sure.
understand it now.
Right.
But maybe you know something that I don't.
Right. No, I think the number one thing is catalyst for change, right? And the biggest catalyst for change is when there's competition and somebody that is like making it easier, making it faster, making it cheaper, and so forth, and just nipping at the bud of as you're running the race, right? I think the incumbents are far too comfortable in terms of trying to get to the next stage, and that's what digitalization was all about. I mean, if anything, COVID helped with digitalization, right? And that was a catalyst for change, but it needed an entire pandemic to make us all digital, right? It's kind of unusual, right? But then that was the catalyst for change. And that's
it was the greatest marketing strategy for Visa and MasterCard.
yeah, absolutely. For a lot of people, I think so. For Zoom and everything, but yeah, ultimately, I think that was the catalyst for change. Is like introduce these, and of course, they're all having their own individual challenges, and they're all trying to find their way in terms of the product and the propositions that they offer. But at least they're also nipping at the butt of the incumbents, and the incumbents are stepping up their game as well, right? So.
I know, just about to point out, you said at the beginning of this that you had a conversation about digital banks and profitability, and only 5% of them are profitable, in any sense of the word. And of that 5%, how many of them are actually embedded finance banks? WeBank, Kakao, right?
Those are the profitable ones.
Those are the profitable. The only exception to that rule is Nubank in Brazil.
Yeah, and Oak North.
And Oak North.
Yeah, and to an extent Tinkoff, because Tinkoff is actually beyond banking. But you're right, they are the exceptions, right? They are the exception that are one of what Nubank's achieved is incredible. But they're profitable for another reason. Both Tinkoff and Nubank actually started as credit providing institutions, right?
Correct.
So they always had the credit ethos in them, right? And what Nubank's achieved, I just saw the results which came out, I think a few days ago. They have 90 million people out of a country of 250 million, and the bank was launched less than a decade ago, or maybe just over a decade ago, right?
I think fundamentally they were able to achieve scale and low cost of acquisition and servicing to be able to hit the unit economics that you're thinking about. In most digital banks in developed markets, which, in the UK, the US, Singapore, Hong Kong, that does not exist. That capability is a struggle. Where it does happen is when they are embedded banks. WeBank had 700 million users, right? On the back of nothing, on the back of no real acquisition cost, because they're embedded in every single auto lender, mortgage house in China.
So I think you guys opened it because the second part of this discussion, and I guess the only other part of the discussion we're going to have here is let's talk about embedded finance, right? So embedded finance is a very wide term. I think firstly it's misinterpreted. People use integrated finance and call it embedded finance, but let's not get stuck in its semantics, right? Because whenever we talk about embedded finance, they go, well, payment gateways. Well, that's not embedded, unfortunately for me, right? That's more integrated finance. It's great. It's done a lot of good things for us. But what I'm seeing in certain jurisdictions, and specifically part of the world that I come from, the move and the shift from embedded payments into the world of, let's say, embedded lending, right? Beyond BNPL, which largely remains unregulated in quite a lot of markets, right? Embedded savings, embedded wealth. There's still a lot of friction in making it happen. And a lot of that friction is actually coming from a regulatory perspective because it really requires multi-regulatory orchestration, right? Because here's a telco who's working with a bank, right? The sale is done by the telco. Even though the product might be underwritten under the license of the bank, there is a certain amount of responsibility that a telco is taking by offering a product. Because let's not assume that every customer is perfectly intelligent, right? So it's different if you have a closed loop gift card, which Starbucks did, and that's simple. Here's a card, you can buy coffee off it, right? So you load some money, it's like a closed loop wallet. But now we're talking about, being able to take loans. How do you see the regulatory market evolve? Because I personally think the biggest thing holding back embedded finance is not necessarily the banks, not necessarily the tech, which they can. Because you're correct about it. That if the business case exists, right, the answer will happen. And WeBank and the others. From a regulatory perspective, what do we do? How do you see the needle shifting on embedded finance faster than it has in the past? And I'm not talking about payments.
My personal opinion, it's a matter of education rather than anything else. If they realize that the true banking as a service and embedded finance propositions created by the banks with whoever it is on the front end, telco, e-commerce, whatever, right? At the end of the day, the decisioning, the underwriting, the servicing sits in the bank, on the license of the bank, in the balance sheet of the bank, and there is one neck to choke should anything go wrong, and the regulators should have no fear because the existing frameworks already provide for that. Now, the questions generally tend, at least in my experience, the questions generally tend to be one of misinformation.
Agreed. Data.
Yeah, rather than something is wrong with the framework. It's you're saying that the bank does everything. You're saying that the bank provides the tech, the bank provides the balance sheet, they do the underwriting, they take the risk, they do the KYC. hang on, so that's exactly what the bank does today. It's just that someone else is the front end channel, and they have some kind of commercial agreement that makes everything work for all the parties in the equation. Now, once they realize that, then they're like, oh, all right, so most of the innovation is on a UX UI customer experience level, not really fundamentally altering the relationship between the bank and the customer, except for brand.
Well, there is another point, and Neil, maybe you want to come into it, and
Sure.
and Kelvin, I'm happy to be corrected here.
Sure.
There is an element of onboarding you onto a financial product, right? And that responsibility is being taken by a non-financial entity, right? So I'll give you a bit of an experience for myself.
Sure.
I worked for one of the largest retailers in the Middle East, actually with presence in Southeast Asia. That's what brought me, right? I did more embedded lending, more embedded insurance than anybody else was doing, at least in the markets that I operated. We just didn't call it. The challenge we always used to have with the regulator, and we had to go and regulate ourselves, so we had to actually spin off a separate entity, get it regulated, was because we were onboarding the customer on behalf of a bank, but the banking activity was invisible. There is a subtle difference, and I think that's where I personally think things get stuck. But again, correct me, Neil, if I'm wrong, because you've worked with banks too.
Yeah, absolutely. So when I was at HSBC, we were doing that. We were working with various types of platforms, so e-commerce platforms, healthcare platforms, education platforms, and building out different ecosystems. And what we were doing is offering this type of embedded finance inside of those ecosystems. So we did deals with Amazon, we did it with JD in China, we did it with Flipkart in India, and exactly that. It's like you've got a couple 100,000 SMEs inside of China that are selling product. You're using data that's from the bank and that's from the platform itself to make different types of credit decisions on those people. And then you'll extend that type of loan. But when they go through the journey, presumably it's seamless, right? So they're inside of an Amazon journey or whatever e-commerce platform journey or a education platform, and then all of a sudden you're on a wealth journey that's on HSBC, right? So, but they need to obviously authorize that type of transition. Now, do you passport the information from that particular platform to an HSBC account? You can populate it, but it's not necessarily kosher, if you will, in terms of like getting them KYC'd on a banking platform, right? But there's a pretty clear demarcation when you kind of, even when you go on LinkedIn and you kind of like, you're leaving LinkedIn, by the way, it's kind of the same situation, right? And I think the other thing is that when you talk about sort of like, if you say liability or responsibility, I mean, it's almost like going to Airbnb, right? It's like, okay, I went into this apartment, they showed me pictures of this and it's nothing like what it looks like, right? So how is the platform responsible for that? So I think you have to kind of demarcate between the two parties, if you will, right?
But that's where the technology comes into play, right?
Exactly.
So in your particular example, I suspect it's because the bank helping you don't have the right technology layer to help you. So you guys do the onboarding, you guys did all the front end stuff and then ported the guys to the bank. That's probably why there's a gray area from a regulatory
But true
standpoint.
embedding is that, isn't it?
That's not the case, right? So if you look at our example, right? So audax provides capabilities for Standard Chartered to embed themselves in Bukalapak, in the e-commerce platform in Indonesia. Bukalapak and Buka Tabungan, which is Bukalapak's digital bank powered by Standard Chartered, it's a seamless experience. The moment you click, yes, I want to open an account, your data on Bukalapak gets shared onto Buka Tabungan, which is Standard Chartered for all intents and purposes, and it's a seamless checkout process. It's a seamless onboarding process in minutes. In Indonesia, completely STP, no
And
paper
the
drops.
regulators have come up the curve to understand that.
Well, there was a long conversation with the
Exactly,
regulator
right.
to get there. But which comes back to my original point. It's more a matter of misinformation. But once the bank has the ability and the technology to get there, then the single neck to choke is the banks at the end of the day. So
I totally get it. So,
It's jurisdictional too, I think.
yeah.
Just
Well, it
kind
is
of
jurisdictional, it's
yeah.
also maturity and so on and so
Yes.
forth. So
Yeah.
here's the last question, right, guys? So if, and for this particular, I wouldn't say use case because it's more than a use case, right? So if banks are going to get better at technology, which typically they're not, right? And obviously their governance will evolve and their decision making will evolve because they'll trust the technology because they control the technology, right? And you have these massive front ends, which are marketplaces, retailers, e-commerce. What role are the fintechs now playing? The pure infrastructure players?
Go for it.
Oh, the way I see it, they're service providers. Like audax is a service provider to banks. We get embedded finance for banks up and running in like 6 months. It's a tech stack. like I said, I don't believe in the guys playing between the banks and the guys at the front end. I think you should create the ability for the banks to do it themselves. So service providers, vendors, it's the way I think about fintechs.
Okay, interesting.
generally.
That's food for thought for a lot of people.
Well, I think, yeah, ultimately there's some that are, I mean, it's to have a unilateral answer for that, I think it's pretty difficult, right? I mean,
Well, it is.
there's-
You always take the risk of generalizing,
Yeah.
but
Right,
where
I
is
mean-
the shift? Is the shift towards that the existing ecosystem players will just re-architect the way financial services, at least in retail, works, and fintechs will be service and infrastructure providers and really don't have a B2C play?
I think they play the full spectrum, right? I mean, they could go all the way. They can be like a vendor in one side, and then all the way to like I'm my Revolut, right? I mean, it kind of plays the entire spectrum, if you will.
Well, we don't want to get into Revolut. I don't want to name them. A
Okay,
lot of us have a very strong opinions of Revolut, right? So-
Okay, so some other names. I mean, the point being is that they can absolutely
yeah.
take the leadership position in that specific space or in that particular prop, right?
But will they ever make money? Because
Well,
they
yeah,
can take.
absolutely. I mean, I'm not saying, but I'm saying they are in a leadership position one way or another. Whether or not they're losing money, that's a different
But
story.
From a
but-
B2C standpoint, for B2C fintechs, direct-to-consumer fintechs, if they're not scaled by today, I think the chances of them making it's going to be significantly smaller than
Right.
what it was a decade ago.
Well, that's my
But then-
fear.
but
That's
then-
my fear.
But then there's also, okay, well, I mean, people were saying that about Amazon too. I mean, when they were selling books, now where are they now, right? I mean, of course, the business model will change
Yeah.
over time. It's not like finite, and they will ultimately. You think that it's perfectly competitive out there, so that they will adapt to the environment, right?
Actually, you see that shift. A lot of B2C fintechs realize that they can't get that scale, and they're pivoted to becoming enterprise.
So
enterprise
I sit on
providers.
4 startups.
Yeah.
I got on the board of all 4 of them as B2Cs, early stage. All 4 of them are now sitting B2B.
Yeah,
And now I'm not saying it's me.
100%,
It's just that
100%.
Yep.
I've quit. We as the advisory board quizzed the hell out of them to say, show us show us the runway just for the next 2 years. We don't even care 10 because you will not be around in 2 years' time because the dry powder is dried out, right? And the chances are that you're insignificant in scale, so you're so far down the pecking order. In any case, guys, thanks a lot. It's Friday evening. All of us have better things to do. It's just the perfect way to leave this conversation with enough food for thought. I'm sure we're going to have other conversations. Kelvin and I have just finished writing a paper, which hopefully gets published in the next sort of few weeks or something like that, right? Neil and I have never published a paper, but we've had several conversations. And I guess next time when
Right.
you're down with your delegation to the UAE, it'll be great to sort of meet you guys. And
Absolutely.
hopefully maybe 6 months or a year down the line, right, we'll sort of get the group together, maybe on a Zoom call and see where we were.
Yeah,
Right.
fantastic.
Right.
Beauty.
Thank you so
Cheers,
much.
it's been a
Arjun.
pleasure.
Yeah.
Thanks a lot for coming,
Absolutely.
guys.
Thanks a
Thanks,
lot.
guys.
Right.
Thanks,
Thanks.
Neil.
Cheers. Bye.